Welcome back to Explain the Charts, your go-to channel for in-depth market breakdowns. Today, August 1st, 2025, we're dissecting Google, Alphabet's Class A stock, by combining the most recent news with our comprehensive chart analysis. Before we dive into the price action, let's set the stage with the key headlines impacting Google. Alphabet recently released its Q2 2025 earnings, reporting robust total revenue of $96.54 billion, marking a healthy 9.39% increase year-over-year. Free cash flow also saw a significant jump of nearly 70% year-over-year, reaching $5.30 billion, showcasing strong operational efficiency. However, net income and earnings per share, while up year-over-year, both experienced a notable decline of over 17% quarter-over-quarter, which could be a point of concern for some investors. Beyond financials, regulatory and legal pressures continue to make headlines, with Google losing its appeal in the Epic Games lawsuit, mandating changes to its App Store model. YouTube has also been included in new Australian teen safety measures, potentially leading to increased compliance costs. On the AI front, Google's commitment to sign the EU AI Code of Practice signals its adherence to emerging regulations, influencing its AI development strategy. Looking to the future, Alphabet's robotaxi unit, Waymo, plans to expand its service to Dallas in 2026, indicating strategic growth in the autonomous vehicle sector. Now, let's turn our attention to the charts to see how these events, both recent and past, are reflected in GOOGL's price history. First, we're going to look at the daily chart, spanning the entire available data, to grasp the overarching trends and critical junctures. As we examine the daily chart, Google has demonstrated a volatile yet generally upward trend over the past year. You can clearly see its 52-week low of 140.53 was hit on April 7, 2025, a significant bottom after a substantial correction from its 52-week high of 207.05 recorded on February 4, 2025. This sharp peak and subsequent decline highlight a major reversal point, where momentum shifted from strong bullish to distinct bearish pressure. Notice the massive red candle on May 7, 2025, which saw the price plummet by 7.74% on extremely high volume. This coincides perfectly with the Q2 earnings data, where despite revenue growth, the quarter-over-quarter drop in net income and EPS likely triggered significant sell-offs. This price point around 151.38 acted as a short-term support after the initial plunge, but the immediate bounce back to the 160s indicated underlying buying interest. The current price level, closing at 191.90 on July 31, 2025, shows a strong recovery from that May low, reflecting long-term investor confidence despite recent quarterly dips. This recovery suggests that the market is focusing on the year-over-year growth and long-term strategic initiatives like Waymo and AI. Let's zoom into the more recent action on the 1-hour chart to observe shorter-term dynamics. Shifting to the 1-hour chart, we can gain a clearer perspective on the immediate price fluctuations. Looking at the period from July 21, 2025 to July 22, 2025, after a decent run-up, we observe a sharp drop on July 22. Specifically, the candle at 1300 hours Universal Time Coordinated, from approximately 191.72 down to 188.779. This kind of abrupt movement, even on an hourly scale, often indicates a significant shift in sentiment or a reaction to specific intraday news. While we don't have immediate news for that exact hour, it's a reminder that sudden price reversals can occur, demanding vigilant risk management. Following this drop, Google stabilized and began to recover, pushing back towards the 190 mark. The 188 to 189 range acted as a temporary support level during this period. Now, let's drill down even further to the 15-minute chart to capture the most recent trading behavior and identify immediate support and resistance. On the 15-minute chart, covering the last few trading days of July, we see increased volatility, particularly around the previous daily close. On July 29th, the stock showed strong upward momentum, rallying from around 192.60 to touch highs near 195.75, showing significant buying pressure. However, on July 30th, after pushing briefly above 197 to a high of 197.5999, which served as a clear short-term resistance, the price couldn't hold. It then retreated, signaling profit-taking or renewed bearish sentiment at higher levels. The latest trading day, July 31st, saw Google open around 196.50 and then experience a substantial intraday decline, falling to a low of 191.09 before closing at 191.90. This steep drop on high volume could be a direct market reaction to the ongoing regulatory and legal news, specifically the Epic Games appeal loss, creating overhead pressure. This current price of 191.90 is now testing what could be a new, immediate resistance level, making any upward movement from here quite a battle. For traders, observing how Google interacts with these levels is crucial. A strong break above 192 with significant volume could signal a short-term recovery, while a break below 191 suggests further downside towards previous support areas. So, what does all this mean for Google? Are we bullish or bearish? In the short term, there are reasons to be cautious. The recent regulatory setbacks and the quarter-over-quarter decline in EPS could weigh on sentiment, as evidenced by yesterday's sharp drop. Immediate resistance is now clearly visible around the 192 to 195 range, where the stock has struggled to maintain its footing. If Google fails to reclaim the 192 level, we could see a retest of support at 185, or even the 180 psychological level, especially if more negative news surfaces. However, for the long term, the outlook remains largely bullish. Alphabet's strong year-over-year revenue growth and impressive free cash flow paint a picture of a fundamentally strong company. The news of Waymo's expansion and Evercore ISI's preference for Google over Meta underline confidence in its future ventures. Furthermore, trading above its 200-day simple moving average, as noted in our news summary, typically indicates a sustained long-term uptrend. Key long-term support remains at the 52-week low of 140.53, a level that has shown strong buying interest on previous tests. The potential for innovation in AI, despite regulatory oversight, positions Google for continued growth in lucrative sectors. Traders should watch for decisive breaks above or below these key price levels on high volume to confirm shifts in trend. Any unexpected announcements regarding AI developments or new revenue streams could trigger strong bullish movements. Conversely, further antitrust actions or significant competition in its core advertising business could lead to further pullbacks. To recap, Google is currently navigating a pivotal range. Immediate resistance is around $192 to $195. A break above $195, particularly if driven by strong volume and positive news regarding AI or Waymo, could signal a bullish retest of the $207.05 52-week high. We assess this as moderately likely, perhaps a 40% chance in the near term given the current headwinds. However, the greater likelihood for the short term, perhaps a 60% chance, is a consolidation or a dip towards the $185 level due to recent price action and regulatory pressures. Further strong support lies at $170 and the crucial $140.53 52-week low, which would become relevant if broader market weakness or company-specific negative news were to escalate. Keep a close eye on trading volume, as high volume on breakout or breakdown attempts provide stronger confirmation. Also, monitor upcoming regulatory updates and any new developments from Google's Other Bets segment for potential catalysts. Finally, always consider broader market sentiment and economic indicators when making your trading decisions on Google. Thank you for joining us on Explain the Charts, and we'll see you in the next analysis.